you so much, Jim, and also thank you so much for DCED for hosting this webinar. We at UNCDF are very excited. So as mentioned by Jim, I'm Deanna Morris. I'm Deputy Program Manager of the UNCDF Shift ASEAN program. I also handle monitoring and results measurement for the program. And today we're going to be discussing measuring and using results for adaptive management in financial inclusion programs. Next slide. And just to start, I'll go through the agenda for some of the slides in the session today. First, I'll start by giving you just a brief overview on UNCDF, what we do as an agency. We are a small UN agency, so some of you may not be familiar with our work. Next, Muaz will give a general discussion on measurement challenges in financial inclusion programs. And then I'll go into some of the details of the Shift ASEAN program's market system approach in financial inclusion programs, and then also discuss how we use our monitoring and results measurement program approach to address decision-making in the program and also adaptive management. And then we'll conclude with some discussion on our external midterm evaluation of Shift and how DCED Standards has supported us in a successful midterm evaluation. Next slide. So first, we'll just give a quick brief overview on UNCDF. UNCDF is United Nations Capital Development Fund. We work on public and private financing for least developed countries. And what does that mean? So we're one of the only UN agencies that can work directly with the private sector, and we do that through grants, loans, and credit guarantees. And we really use these mechanisms to particularly incentivize the private sector to develop financial solutions for last mile clients. We also work with governments in the development and advocating of inclusive policies, developing national financial inclusion roadmaps and setting indicators on those roadmaps for financial inclusion targets, and also working with regulators to develop regulatory sandboxes to test private sector solutions in the market in a regulated and safe environment. And we also work in terms of data and big data to inform our work, to really get deeper understanding of different subsets of the population and use that information for customer-centric product design of financial products, and also for government regulation and policy making. So that's an overall overview of UNCDF's work. Today we'll specifically be discussing the Shaping Inclusive Finance Transformations program. It's called SHIFT. It's a financial inclusion program based in the ASEAN, Southeast Asia region, and the program aims to support financial access and financial usage of women individuals and also women entrepreneurs. The program so far, we've been going for about 4 years now, since 2015, and we've reached over 2 million beneficiaries so far. It is a very complex program. We're in 5 different countries and also implement our policy at the policy level across all ASEAN. So it is a very complex program, and I'll go into that a bit more in later slides. But right now I'll hand over to Muaz to discuss on measurement challenges in financial inclusion programs at the general level. Next slide.
Good morning. Thank you, Deanna. As mentioned, my name is Muaz, and I'm a consultant working in monitoring and evaluation, market systems, and financial inclusion. I'm a DCED approved auditor, and I've been working with UNCDF, particularly Shift programs, since the beginning of 2016. And I've worked with a few other financial inclusion projects and continue to work with them. And so what I will cover in my slides is how financial inclusion differs from other, let's say, market system projects, let's say in agriculture, working in micro enterprise and all that, and some of the salient feature which I have observed. So it's more of a generic kind of things to look into, things which are different for financial inclusion. So that will be my focus. And I've structured it along few slides where I focus on result chain, the difference and salience in result chain, then on indicators, then on how they're different in measurement and monitoring, then on attribution and the overall M&E system. So that's kind of my structure of the presentation. Let's move on to my first slide. So in terms of developing result chain, first thing which is interesting is most of these financial inclusion projects classify or categorize their interventions into either thematic or their implementation approach. So it could be that they have interventions which are focusing on data, policy, innovation fund or challenge fund, or they sometimes classify their intervention along how they're implementing, whether they're giving grants, whether they're giving loan guarantees, whether they're making credits or something like that. So that's kind of how the result chains are clustered. Another thing which I've noticed is there are lots of result chains around data and capacity building because they are crucial in financial inclusion. When you're working with banks, there are millions of data. So a lot of the financial inclusion projects actually work improving capacity of the either government or the private sector to handle data and work with those data. Another thing to look into is crowding in. Now, in usual agriculture MSME projects, we expect, we work with a partner, someone else then sees the innovation business model and then crowds in with little support or autonomously. But in case of financial inclusion, we know banks and MFIs and other financial service providers are usually conservative. So it's rarely the case that when you work with a partner, they do something that another partner would just jump in. So crowding in is a bit, you have to do it cautiously. The other thing which is unique to financial inclusion in my experience is the financial literacy component. Usually most interventions on financial inclusion have a financial literacy component where they're trying to improve the literacy of the end beneficiary. So there is a component around that. How that is implemented depends. Sometimes if you're launching, let's say, an app product, people might have, the project might work with the private sector to have a built-in financial literacy component in their app. Or sometimes they work with NGOs in a blended way where the private sector and the NGO try to work together to improve the financial literacy of the end user. The important thing is financial literacy is very important in terms of uptake. It ensures that the end beneficiaries are actually using the product. So that's a critical component of the result chain in any financial inclusion intervention when you're working with private sector. Let's move on to the indicators. The next slide. In terms of indicators, pretty much it's similar to other projects. What differs is there are some core indicators around. There is what they call AFI indicators and G20 basic financial inclusion indicator, which I've already mentioned here. So there are lots of established indicators around financial inclusion. What do you mean by access? What do you mean by usage? I'll discuss that a bit later. So these are widely publicly available, and a lot of these financial inclusion projects, you take them up and you use them in their indicator list. One thing to keep in mind though is the project has to decide like whether to have indicators around employment, or does it end with financial inclusion, like end beneficiary using a financial product, or do you want to go further and look into whether they using it to invest and improve income or increase employment, whatever. Also, you have to keep in mind while you're developing indicators where you're going to get the information, because in financial inclusion, as we'll see in the next slide, that's a critical issue. Let's move on to the next slide. Yes. So one thing about DCED always says, if you've worked with DCED, that you should look into unintended impact, or which can be positive or negative. Now, in financial inclusion, that's my experience. It's very important that you do actually look into this unintended impact, because there is a good chance that you might also have negative impact, because you might create, if the product is not right, you might create indebtedness, which is certainly something you don't want if you're promoting a credit product. Or you can see that the payment cycle is such that people are actually using it for health purpose to or for consumption rather than actually making any sort of productive investment, which you probably also don't want. So it's very crucial to monitor this. There are innovative tools to observe financial behavior. Two important, there are quite a few mentioned, but two things that I would say is, one is financial diaries, where you work with 30-20 people and beneficiaries and ask them to record how they are spending their money. So daily, the researcher would go in and collect the data maybe over a month and see how people, or even a year, to see how the end users are actually spending their money, where they're getting funds. So the UNCDF has done that. There are published papers on that, so have a look. So that's a very interesting tool. The other one is lean data. I'm sure you've heard about it. Kind of opposite of big data, where you're trying to use appropriate data. UNCDF again has used it is experimenting with it. So these are some of the common tools which are there. In terms of baseline, one thing to remember is because you're working with financial service providers, they collect actually a lot of data. So this is an advantage. But the important thing is they're also very kind of concerned about their data repository. Banks are really reluctant to share data, or fintech companies as well. So when you're signing a contract, having a non-disclosure agreement or having a mechanism whereby you can share data is crucial, because if you can leverage that data, getting baseline data, because they have what they call KYC requirement, know your customer, so they will collect these data anyway. So if you can leverage it, it's great. The other thing is gender related. You might want to have indicators around whether women, if you're targeting women with financial products, do they actually have control over that fund, or are they being used as a conduit in MFIs, like it has happened, where men take the money once the women get the loan. So whether that's happening. So this area of control over fund and decision making might be interesting if you're targeting women. So that's something that should be there in your MRM plan. Moving on, attribution. Now, in attribution, one thing that is important is we often focus on plausible attribution, but in case of financial inclusion, because as I said, you work with capacity building, you work on policy, attribution may not be always possible. So people also have intervention which measure contribution. And so they might have intervention around policy where they're measuring contribution, and they might have intervention around challenge fund where they're measuring attribution. And also what kind of impact, if you want to see attribution at the income level, whether the increase in financial result in income. So those are the issues that you need to look into. Again, as I said, financial service providers, you can leverage their data if you have the right sort of agreement with them. Moving on. Now, overall system, just few points that I would cover is, first difference is the strategy plays a role in aggregation, how you're aggregating, whether your financial sector interventions are part of, let's say, MACE sector. So then that's one sort of aggregation. Or whether you have financial sector as a separate sector and that it has its own strategy. So that kind of is important. And also, how you are adding numbers. So some projects, Deanna will cover UNCDF, you will see, they say this is the results from attributable interventions, incomes where, attribution is measured, and these are the impact from the policy or capacity building works which are focusing on more on contribution. So they sometimes aggregate that way rather than, kind of merging the two so that there is transparency. Aggregation, one thing to note is there are definitional issues. Usage means different thing to different financial products. So standard approach is usage can mean one usage per 90 days when it comes to e-wallet. When you're promoting e-wallet, that is a standardized indicator. One transaction per 90 days would be considered a usage. Whereas if you're selling savings or usage repayment product, it's one transaction per year. So how you add them up, that's the question. And as I said, in case of financial inclusion, one good thing is there is a lot of third-party studies, big studies that are being conducted annually, such as FinScope, Making Access Possible, which are done by, I think, Making Map is done by UNCDF, Intermediate Study and others, which are available. And if you can leverage them, that's great, both as baseline or as, some level of broad level market survey stuff. That's great. So this is something unique which happens. I guess that's about it from my side. I will hand it over back to Deanna, and she can take it off.
Great. Thank you so much, Muaz. And I think that actually gave a very good overview of some of the considerations for financial inclusion programs, particularly in their monitoring and results measurement programs, and also some of the challenges faced as well, which SHIFT itself is also facing some of the challenges that you mentioned, particularly regarding the aggregation, which I'll mention a bit later. But moving to the next slide, first I just want to give an overview on the Shift ASEAN program. We are a market development program, and what that means is that we work to identify underlying causes of market system failure. This is, a lot of you know the donut here, in the supporting functions and the rules and norms. And we also leverage market players and stakeholders to deliver, extend new and innovative financial products and services to target beneficiaries. And we facilitate stakeholder and institutional behavior change. So how do we do this? We do this by working to address a range of constraints in both the primary and secondary markets. One is through addressing supply side constraints through our investment mechanism, which is mainly through a grant investment mechanism with private sector financing institutions and fintech institutions. We usually do pair this with technical assistance in terms of product design, in terms of also partnership establishment with those financial institutions, with other bodies. And we also, again, I mentioned this already in the UNCDF slide, but we do work also on the policy and regulatory side, so in the rules and norms. And we do this particularly with our work with central banks, developing and advocating for inclusive policies, but also working with FSPs, that financial service providers, FSPs, to help them enter into regulatory sandbox and test private sector solutions in the market under a regulated environment, and we've done that with Shift. In terms of the information constraints that we see in the market, the access to data is not an issue in financial inclusion, but how that data is segmented and how it's used is an issue. And we do have something that's very unique with Shift's program, which is we have big data analysis and partnerships with key banking institutions in the region. And this has really allowed us to get an understanding of how customers who already have access to financial services use those services, see the gaps in service coverage, and also understand opportunities for tailoring products and services to customer needs. So that's been a very useful tool for us and has informed kind of how we develop our not only our regulatory support, but also our supply side support through our investment mechanisms. And then the training and capacity building that we do as a program, it focuses both on the private sector, so support to product design, also in terms of data analysis, which I mentioned already, and also in terms of government, in terms of improving their ability to analyze central bank data for informing policy making. So overall, Shift is a very complex program. You can see that we have a variety of interventions in different areas. And next slide, please. And with our interventions, this makes the monitoring system very important. We have 25 simultaneous interventions right now. But one of the things we need to do is really have a balanced approach to our measurement system. We have one full-time staff member, myself, and a consultant that split time between that, working on that. We have a limited budget of only 3% of our annual budget on M&E. So there are constraints in terms of HR, time, and the cost for our monitoring system. So it is very important for us to have a balance in terms of cost, quality, and time. Some of the things that we are doing to overcome some of the challenges we do face is through lean data analysis. This is something that we are just starting to test this year with our investment portfolio to support gaining information really at a rapid level to inform our investment decisions, which can be done in a quick amount of time and also a very low cost. We also use the big data analysis as well as obviously some of the general reporting that we do have from our investment mechanisms as well. Next slide. So in terms of how our monitoring results measurement system works, we do follow several principles. One of them is we fall in line with the CGAP measuring market development guidelines. For those of you who are not aware of this, it's a set of measurement guidelines designed specifically for financial inclusion programs. And SHIFT actually worked to pilot this with CGAP, so we worked with them from the very beginning of the development of these guidelines. And we also draw on DCED standards for our measurement approach. We use three, I would say, overarching kind of areas where we undertake our monitoring and results measurement. The first one is through a results chain. We call it a bottom-up measurement approach. And this is very much based on dashboards that we've developed. And I have to say this is very useful for our program and was very useful in our midterm evaluation as well, because it allows us to have all of the information in one place. As I mentioned, we have 25 investments interventions. Of those 21 are actually very unique investments that we have. So it is difficult to remember, all of the risks, all of the challenges, what the business model is. So this dashboard is very useful. It tracks the risk tracking, it tracks targets of achievement. It also has a results chain, of course, which our partners have actually found very useful as well. With our investment partners, obviously they're not expected to fill this out or maintain this dashboard. That's the role of the MRM team, but we do share it with them when we go on field missions and do discuss the results chains. And it's based on our experience, it's been very useful for them for planning as well, because a lot of times people think, oh, this API or a technology solution is going to take very short amount of time. And based on our experience, partnerships, technology, and agent network coverage are the key kind of areas where they're stumbling blocks and there can be a lot of delays. So it allows us, based on a lot of our experience in having several investments over a period of the last 4 years, to be able to identify some of these challenges and work with our partners using these dashboards. The next approach that we take is a systemic change analysis, and we use the AAR framework for this, Adapt, Adopt, Expand, Respond framework. And this is used for a contribution narrative, but it's also been used for the attribution narrative as well for our program. And we do have a very specific example of where we've been able to do this in Vietnam, where we worked with an e-wallet provider to develop an app. So the Adopt, that technology company that developed the app was hived off from the bank into its own company, so Adapt. And that technology company now is actually designing another e-wallet for another bank based on the lessons learned from the development of our e-wallet with a different bank. So we are actually being able to see kind of attributional changes in the market system, and we're excited to see how that develops in Vietnam, and also being able to track that, and this has been a very useful tool for that. And then the final component is the top-down approach, and this is very specific to CGAP guidelines. And Muaz mentioned this already in terms of a lot of data and market analysis is available already on the market. You have Findex, which is by the World Bank. We use something through a partnership with Finmark Trust that's called FinScope, and that gives us kind of a baseline, and also we've just done a refresh of that in Myanmar, and it gives us more of an end-line survey to see how has the overall market changed in terms of financial inclusion over a period of time, usually about 4 years. So this is also very useful for us to get a general sense of the market, baselines, end lines, and to also draw some contribution, particularly around some of the policy roadmaps and indicators, in particular implementation we've done under the policy frameworks at particular countries. Next slide. So that's kind of an overview of how our measurement system works, but I want to give you some real case examples of how we've used these tools, and also how we've used them for adaptive management. So I mentioned we have this investment mechanism, or a challenge fund that we're doing, and that currently has 21 simultaneous investments reaching over 2 million people. So in terms of the type of information gathered through our monitoring systems, we have that shown to the right here in terms of different categories. So the investment startup, which is where we do the due diligence, we sign our performance-based agreements. Then we also have quarterly, yearly, and final reports, as well as ad hoc measurement activities that we also undertake, surveys, case studies, other things. So I'll walk you through kind of an example of how we plan and adapt our program over time through some of the findings that we've had through our monitoring and evaluation. So as the first step, of course, in the challenge fund or investment mechanism, we first identified the problem, market barrier, and the funding window is designed based on that. So we've had funding windows on remittances, we've had funding windows on women's access to digital financial services and women merchant access to credit lines. So that's the first step. And next, once the challenge is defined, we launch the challenge, we establish partnerships, we undertake due diligence of partners, and undertake the agreements and the signing. But the interesting thing in this process, and where there's been some very good feedback, is we've initiated surveys on the application process itself to get feedback on improvement for future rounds of investments. And we've had several adjustments to the program based on this. Some of them have been in terms of adjustment to timelines for the application process, adjustment to the forms, so what information we collect from the applicants, also in terms of feedback loops, and this was a major one. We're not married to our investments. We are a market system program, so we want to see changes at the market level, not necessarily just in the investments that we have. So having feedback loops to the applicants is key, and this is not something that we did initially. So this is something that has been improved to really be able to see kind of how those applicants can take their idea to the market even without our funding. And this has also been improved through technical assistance at the application process itself, and also coaching to develop a pitch, which was also an adjustment that we made to the program based on some of these feedback loops and some of the surveys that we've undertaken. Next, in terms of implementation of the investments that we do have, we do gather regular reporting and also have regular engagement with all of the investments themselves, and we can usually see a trend within the first 2 quarters of any challenges, and this is very much due to the bottom-up measurement system that we undertake. And I'll give you one specific example, and it's actually from that Vietnam example that I was mentioning. While it's flourishing in terms of the AER framework, there are also challenges in terms of usage of the e-wallet, and this is a market challenge as well. But as we started to gather some of the regular data and information, we did start to see a downward trend in usage. And what we did was we gathered information from quarterly reports, calls, we had field missions, convening focus groups. We also did budget analysis, which showed a significant decline in the marketing costs around the e-wallet. And we undertook what I would call a customer journey, kind of a customer segmentation profiling of users, understanding when users uptook the application and also when they exited the app. And we presented this to the company, and there were some very easy wins and some very clear pain points that the customers, that we saw from the customers. One of them, for example, was a login ID replacement for getting your ID, and how to do that more effectively, and also using facial recognition and thumbprint recognition for sign-in. So this was adjusted by the company and was a very easy fix, but was also creating drop-offs in usage. So this is where the system itself allowed us to use various means of engagement, both through our own analysis, but also through information gathered from the company, to work with the company, present some of the challenges that we're seeing, and now increase the usage. And we're working with them. Actually, we've changed how our investment is structured with them to channel more funds towards the technical assistance for the partnership. So it has informed how we're channeling our funds as well. So that kind of is an overall reflection of just some of the approaches that we use. Next slide. But I will give some also high-level challenges that we've identified or issues that we've identified in the program and how these have been addressed. And I think these are also kind of similar to some other financial inclusion programs as well. As a women's financial inclusion program, we have a target of 65% women. Although we've reached our absolute target, which is 650,000 women, in terms of our overall numbers, because we've reached so many, 2 million, it's not a balance. It's not 65%, we're at 38%. So this is something where we started to look into what are the challenges, why is there still an imbalance. Digital literacy is a major one. A lot of our investments are on digital financial services. Financial literacy is also another major barrier, which has resulted in us investing in a financial literacy application in Myanmar, and also integrating financial literacy trainings in some of our other investments. And as a result, besides those changes, we've also realized that we need to update our theory of change, amend some of our targets, and change some of the assumptions and risks related to the project as well. In terms of the e-wallet usage, I did mention this from Vietnam already. In terms of other challenges, partnership challenges and lack of knowledge of client preferences has been two major areas that we've seen as challenges in the program. And this, as a result, has allowed us to change our application process. So rather than saying, I'm planning to partner with this person, now you need to have a letter of intent for the partnership, which solidifies a bit more the partners that you intend to engage, and we can understand where they're at in that partnership engagement process and where maybe we would need to step in to help provide further support. We are also providing greater assistance support to the applicants to reduce failure rates, also to increase support in areas which might be needed. We have partnered with Visa, Oracle, and Deloitte to provide those services to our grantees to really be able to help them to scale up their initiatives. And then the final point, which actually seems very obvious, but it wasn't obvious to us in the beginning, and I think that's sometimes how it happens. So the project implementation periods and grant amounts should not be standardized, and they should really depend on the fund's objective. So for us at the very beginning, we had a very standardized approach. It was based on our market analysis, looking at other types of innovation funds on the market, what the amounts were, what the timelines were, which was a good start. But in the end, we did find that, we needed to adjust the funding amounts. We really needed to adjust the timeline for implementation. And also, based on those two changes, the adjustment to the expected targets of beneficiaries to be reached. So these are all things that have been undertaken by the program. Next slide. So while effective learning and knowledge management is crucial for better program design and more effective interventions, it's also crucial for learning from market players and adaptation of the market more broadly. So this is something that as a program we're continually working on. Internally, we have, which I mentioned before, the mechanisms that we're using, but it includes reporting, PowerPoints, different meetings that we have to really discuss some of the challenges, particularly around our investments and how we're making changes to better support those investments. But from an external market consumption side, we're really moving away from bulky reports to more quick, easy, consumable blogs, videos, which are widely disseminated to our network of 2,000 organizations and partners. This is, I would say, however, it takes time, it takes resources, and not all programs have that. And how we've done this is embedding the responsibility in each staff. So having a requirement of a minimum of 1 to 2 blogs or relevant content per quarter that's going out to the market so that people can really start absorbing that and start to try to adapt some of the learnings that we've had from some of our programs into their business practices as well. And again, this is something that I think can always be improved, and we're continuing to try to improve this as a program, but it is something that we also do see as very important. Next slide. So coming to almost the end of the presentation, one of the things I would like to share is, we've been sharing a bit on how our program is structured, how we see our approach, but it's good to also understand from an external perspective how our monitoring system functions, the strengths, and also areas of improvement. So last year we held a midterm evaluation. It was conducted by MCRIL and IPE Global. And the evaluation was used for improving the program, of course, and also for the proving function, so areas of attribution and areas of success for the program. So one of the key challenges, I would say, in conducting the evaluation was due to the fact that SHIFT is a very complex program, as well as a very tight time constraint for the evaluation to take place. Gaining the depth and market system insights was limited. However, one of the, I would say, strong suits and benefits of the evaluation was, and that's key for any external evaluation, is that the evaluators themselves have a strong presence in the market here. They are very familiar with financial inclusion programming and very much understand the local context. So they were able to draw a lot of results and linkages between some of our activities and those at the market more generally. Next slide. So in terms of some of the strengths and approach of the midterm evaluation, the DCED approach significantly supported the evaluation and its success, I would say. The MRM approach was viewed by the evaluators as comprehensive and systematic. Particularly the bottom-up monitoring was robust and captured process. So I mentioned the risk issues, also going beyond access and really looking at usage of financial services, which is key to really understanding what the barriers are for improved livelihoods and really having not just the access to financial services, but being able to use those financial services for higher level objectives. The bottom-up and top-down approach was adaptable. So as a complex program, we are using the MRM system in an adaptive way and making that adapt to the market as it changes over time, which the evaluation saw as strong. And also the qualitative and quantitative indicator gathering was able to show really robust evidence and documentation to the evaluators. There are, of course, areas for improvement. One of the biggest areas for improvement would be in policy and advocacy activities, and the feedback on those areas was less well documented and consolidated. And this is also where the contribution approach comes in and the top-down analysis that we mentioned earlier. So this is something that we're very much taking forward this year and working to improve. We also have developed a policy measurement approach. Policy is very difficult to measure, but we are testing this and have developed an approach for the program. So we'll be taking that forward this year. Muaz had mentioned the disaggregation as being an issue. Disaggregation was not an issue internally for us. We have one dashboard per investment, so it's very easy to disaggregate because it's all there. But the issue is more from the donor side. So we've reached 2 million people. We have 50% usage. That's 1 million people. But how that usage is calculated is very difficult, and it's very different based on the different types of investment mechanisms. So whether it's an e-wallet, whether it's a savings mechanism. So this is something that now we've discussed with the donors. We've adapted our reporting mechanisms and are doing that more clearly. Also, in terms of defining poor and vulnerable populations, this was a challenge, particularly working in 5 different countries where the income thresholds and country context is very different. We are using PPI and bottom 40 to assess this, and also we'll be taking this forward through lean data analysis this year as well. So those are areas where we're continuing to improve. But I will leave it at there. I think we've covered a lot of information. I'm sure there's a lot of questions. So I will stop there and hand it back over to DCED.
Hello, everyone. I'm Nobunita from DCED, and I will facilitate this question and answer round. Deanna and Muaz, thank you very much for this very informative presentation. It was very useful, and a lot of things were covered, from more generic results measurement issues that come up in projects working in financial inclusion to these more specific examples from SHIP. So it was really useful. Thank you very much. Going to the question and answer round, we've already received some questions that people have posted during registration, and I wanted to ask you, Deanna and Muaz, to respond to those before we take some of the questions that we can take in the next 10 minutes. So if you're here now and you have any specific question on the presentation or something more general in terms of results measurement and financial inclusion, please ask us using this chat box below. And when you pose the question, please use the option of chat with everyone so that we can all see the questions. So one of the questions that came up during registration was asked on what kind of higher level indicators do you assess if you work in SME financing specifically. So I'll ask you, Deanna or Muaz, to try and answer this. So, what indicators do you look at for SME financing, especially at the higher level?
Great. I'll take a stab at that first. We have an MSME financing round right now that's going on in Indonesia. And it's very interesting because I wouldn't say that there's a one-size-fits-all approach. All of our indicators are very much tailored to the specific initiative itself. From the higher level, in terms of the types of indicators, we would have number of loan clients, gross loan portfolio outstanding, number of loan clients that have repaid in full, PAR, of course, portfolio at risk, 30 days and 90 days. The percent of loan clients that have repaid on time. We have also the write-off ratio for unpaid loans. Also, the amount of loans dispersed, so the total amount of loans dispersed and the average loan size. So those are very much higher level. The interesting thing that I would say here is those are general measurement things that we would collect for any type of lending type of a platform. But we're also working with fintechs. And from the fintech side, we also have different indicators that we collect. And part of these is to understand app functionality, also the sustainability of the application, also attrition. So some of the indicators that we use there are average number of days since the download of the app to the loan application. So I've downloaded the app, and then do I fill out the loan right away, or do I fill it out a month later? Also app open rate, and also number of devices used to access the app. App churn, so how many people have uninstalled the application. So these are also maybe not things that you would necessarily think about right away, but it also really shows us the sustainability of some of those applications. In terms of where we measure up to, we measure access, so how many people have been provided access and also the usage of that, and this goes across all of our financial products. So I would say that's kind of in a nutshell some of the measurements that we undertake. But Muaz, I'll also hand it over to you because you're working with a lot of different financial inclusion programs, and I'm sure there's some other good examples.
Thank you, Deanna. Well, I mean, you've covered most of the stuff, but I guess UNCDF, you did some of the case studies also of end users, right, to see how they were using the financial product. I remember the initial Clean Start stuff work that SHIP was also working on. I remember you went to the field and talked to whether the people were actually using the product, what was their experience, whether it was too costly and all that, right?
Mm-hmm. Yeah.
So those are like, as I mentioned in my presentation as well, some projects, including SHIFT, is monitoring now, although they're not necessarily sometimes mandated by the donors, but the donors also want to know, like, what are, so people are using financial products, how they are investing, how they're using it, whether it's making any difference. So these even higher level kind of impact level indicators are being monitored through case studies and various other mechanisms, I guess.
Yeah, and just adding to that too, going beyond, just the indicators of usage to qualitative assessments like the case studies. One of the big things that we always want to understand is why are they using it? And it really gives us a better sense of, what are their needs, how we can adapt the product to better meet those needs. So this is always a question that we ask, as well as, how it has improved their livelihoods, if at all, and other questions like that as well.
Thank you, Deanna and Muaz, for this very comprehensive answer. As we are almost rounding up to the hour, I'll just take in some of the questions because we've received some questions through the chat box. So Adam posted 2 questions. One is, how useful is it for monitoring and impact assessment as opposed to contextual understanding? So this is in relation to the use of big data. How useful it is for monitoring and an assessment. Maybe I'll actually ask Adam to, Adam, could you maybe explain this question a bit more specifically?
Yes, can you hear me okay?
Yes.
Great. So I was wondering, in big data, the examples of big data that I've seen have normally been about understanding kind of the overall context, like how many people are using, let's say, mobile phones, what's access to finance, and so on. I guess I was wondering how useful it was for tracking, like monitoring the progress of interventions or looking at their impact, given that this often needs quite specific indicators which you might not find in whatever data set you're using. So I guess I'd like to hear a bit more about that. And then the second part of that question is, if you are trying to improve your use of big data, what kind of resources and capacities do you need for it?
Great. So in terms of big data, I think our program is very specific. The agreements that we have with some of the institutions are also, they're some of the largest financing institutions in the respective country, but we also have an investment with them as well. So we're coming at it from 2 angles. One side is the regular reporting based on the investment and the KPIs, key performance indicators that we've set with that institution. And the other angle is the overall data that that institution has and analyzing that. So for our purposes, it's great because it gives us really the big picture and how our small investment fits into that big picture, and also gives us time series analysis as well. So we can look at, once our investment has started, has there been a significant increase? And this has happened actually in one of the companies because we worked with them to develop a partnership to expand their agent network, and it expanded by something like, I can't even remember how many agents, but they ended up getting 50 more thousand clients. So that, of course, is an unintended result, but it's allowed us to be able to track that and see the impact on the institution overall. I think in terms of just big data analysis at the market level, it's not necessarily that for ones that we don't have investments with, it's not necessarily as useful for our monitoring system directly, but it does give us a very good view of the market. So with some of the big data analysis that we've done it with 4 microfinance institutions in Cambodia. It's given us some good trends to look for. So in terms of women's usage of savings is longer term, and they're more stable clients, but they are low value savers. Also, women tend to exit credit relationships much earlier than men, and also don't usually take out a second credit product. So these are interesting insights that we are generating, and it can help us also support the company in kind of better designing the products and tailoring some of the products that we're already invested in. But I think this is a very specific example for UNCDF. In terms of the resources we need, we have a partnership actually with Pulse Lab Jakarta, which is a UN big data initiative. So they have all of the systems in place that can really help support that. We also have a data specialist here in-house. So having so much data, you need the systems and the storage and all of that to back that up. So this is where we really use Pulse Lab Jakarta's support.
Thank you, Deanna. I hope this addressed your question, Adam. The next question that we have is from Ahmed Shitata, and he had a specific question on what are can you give some examples, I guess, of indicators that can be used to assess systemic change? Maybe, Muaz, you can also elaborate on this, given you have an experience of working with several programs which work in financial inclusion.
Yeah.
I'll give it to you.
Yes. Thank you. I mean, in terms of systemic change, I guess there's like not like one indicator or few indicators that captures, let's say, systemic change, but what we have is what Deanna mentioned, the 3 levels. So in result change, you're looking at systemic change, you're looking at what are there other actors who are trying to crowd in, which, as I mentioned, is difficult to see, or do you see other uptake, changes in the intermediate service provider level, something like that. But then you have, Deanna gave an example of AER, which was in the middle kind of thing, where you see whether the intervention that you try to do, whether the collection of intervention, which are resulting in crowding in, market responding and all that. So that's kind of like at the AER is at the meso level. But also systemic change can happen. That's why we're doing the GMS, the top-down thing, where we're trying to see whether we see a broader level change in terms of financial inclusion. So maybe we work with the government to launch a financial inclusion roadmap. And what we try to see there, the systemic change, private sector jumping in, taking advantage of this policy change and doing new innovative things, and other actors emerging. And that's where you see the broader level contributory change in systemic change. So at the 3 levels, different, obviously attribution, contribution would come in, but this is kind of the overall narrative that comes in. Systemic change at the very focused intervention business model level, then maybe at a more collection of intervention at the AER there, and then at the top down where you're seeing the overall change in the market system in financial inclusion. I guess that's kind of it. Hopefully that answers somewhat the question.
There's a follow-up question actually from Ahmed, who asked that, what about copying and crowding in? Do you see them with shift? So maybe this is something, Deanna, you can answer?
Sure. In terms of copying, yes. I mentioned that actually in the AER framework with Vietnam, we are seeing this as others actually using the same learnings and e-wallet model that we've developed, and other banks actually copying that. In terms of crowding in, I'm not sure that this was really constitutes crowding in, but one of the very interesting initiatives that we're working with in Myanmar, it's a e-learning, it's digital literacy, financial literacy application with Wave Money. And the purpose of that was actually to drive usage of their e-wallet, but how they've seen this is that they want to white label this to basically allow others to edit the content of this and develop it into their own national languages. And they also have someone actually, this is in Myanmar, but they have another company somewhere in South America who is looking at this app and looking at how they can adapt the content to their users in that region. So it's very interesting to see very different regions also interested in this application and its use.
Thanks, Deanna. I hope this answered your question, Ahmed. I'll just take like this one final question that had come up during the registration, and somebody had asked, what was the key challenge in applying the DCED standard in a financial inclusion project, and how did you tackle it? Maybe this one is also for you, Deanna.
Sure. In terms of DCED standard, it focuses on plausible attribution, and we do include plausible attribution in all of our investments. That's the kind of easy side, I would say. But in terms of our policy work and also our learning and data work, it's a bit more difficult, particularly on the policy side, to apply plausible attribution. So this is one area where we do also use the CGAP approach in looking at contribution analysis to our policy work, and that we're using the top-down approach for that. Muaz, I don't know if you had anything else to add on that one point as well.
I guess one thing is also like regarding the DCED audit. I mean, in terms of like the UN has its own internal review process, right? So
yeah,
review. So that's being used. So we don't go for the audit. But you're right. Plausible attribution. I think that was the major thing. Otherwise, the rest we could more or less implement. I think that's where inclusion of contribution analysis, let's say, that was the defining thing.
Yeah.
Thank you, Deanna and Muaz, for answering these questions. It was really useful. Finally, we wanted to ask everyone who has joined the webinar today if you can tell us what was the most useful takeaway for you from this presentation today. If you can please reply using the chat box and choose the option of chatting with everyone. It will really help us in improving our content for future webinars as well. And we also will be posting a feedback form in the chat box, which will also be emailed to you along with the webinar recording. We would really appreciate it if you can take a moment to fill this out, as it really helps us in improving our content.